The report starts by noting the sharp sell-off in gold at the beginning of the month. This is written before yesterday's rally, okay? It then offers a cautiously, they're very cautious in their price prognostications, outlook for gold prices driven by ongoing geopolitical uncertainties and anticipated interest rate cuts by the U.S. Federal Reserve.
Welcome to the Morning Markets and Metals with Vince Lanci, where each morning Vince brings you the financial and precious metals news to get you ready for your day. And now, here's Vince.
Oh, good morning, everyone. I'm Vince Lanci, and today's market rundown this morning, we're going to go through an ING report, their monthly report on gold, which should recap, I think, very nicely what we've seen in the last month as well as the last 72 hours. We're also going to go through in premium some comments about charts that I think need updating, referring specifically to the concept of cap and accumulate, which is what's going on right now. We may be breaking out of another subsection of capping and accumulating. Anyway, let's start with the markets. The dollar is on the bid side of unchanged. 10-year yields are down 5 at 394. The S&P 500 is down 5 handles at 5320. The VIX is 2380. Unchanged bid. Gold is down at $0.50 right now at 2426 after being strong all night. Probably residual buying coming in from yesterday's torrid move. Silver down 4 cents, 27.50. No surprise there. They will continue to sell silver on lulls in gold and then continue to buy gold on bottoms in silver. And keep doing that until we get to a certain price, and silver rallies 7% in one day. Copper is 403, up 1.4%. So you say, well, why isn't silver higher? Because they're taking turns. It's not a day thing. It happens over time. Copper could drag silver up today. Let's put it that way. WTI is up 57, trading 77.11. Natural gas is 212, unchanged. Bitcoin rallying very nicely. Down today, don't get me wrong. 60,679, down 1,000 at 163. Ethereum 2638, down 47, down 1.77%. Those, you want to think of it, if you're a crypto person, Germany sold, other people sold, other people front ran that, and the market dropped. This is a cycle that's going to happen for a long time. If you're a gold person, when you hear someone say Bitcoin, someone sold, well, just think IMF sold gold. It's the same thing. It's the same thing. Gold 2.0, folks, except that it's not gold. And when that's over, the ETF flows drive it back up. Palladium and platinum. Palladium is 928, up almost $3, and platinum is down 927. While palladium is over platinum again. I don't know what to make of that. Certainly needs looking at, but if you believe, as I do, platinum will increase relative to palladium for several reasons going forward, then you probably would be a buyer of platinum and a seller of palladium on a spec. I'm not doing that. Grains up 6 cents. That's soybeans at 10.41. Corn is up a penny at 3.81, and wheat is 5.60, spot 70, up 10 cents. So wheat's pretty strong, probably dragging the other grains with it. Gold chart. Gold chart. Well, I added a couple lines today, right? So these are the lines that I've had, and I added this line today. There's really no reason to add this line except that it dovetails into what I think is going on in this cap and accumulate. It kind of looks like this: cap, accumulate, cap, accumulate, cap, accumulate, cap, accumulate, and cap, and possible accumulation. I'll get into more detail on that in a little bit, but let's go to the main event. All right, there's the front page. Put out a post yesterday updating everyone on the emerging China Latin American silver cartel. The concept being that we have information from conversations that I've had with several people, including one that Chris and I had with a mining executive, that China is buying silver concentrate. And we think that that's the reason for the premium in China. We have a second part that's basically going to be the interview transcribed. And we were waiting for some information from CPM Group about the VAT situation in China to see how right or how wrong we were. And that hasn't come out yet, so we can't wait anymore. We're just going to put this out. Top stories on the left there, CNN effectively worthless after parent Warner Brothers. That's a zero hedge story included in with some other stories that we thought were important from mainstream media. We're going to talk a little bit more about that in the news section. And silver short CTA pathway to hell begins. That's me throwing a picture on yesterday's broadcast. They're short silver again. We talked about that, and we talked about that with the CTA reports as well, and that's where we are. Yesterday was an example, a short-term version of that. All right, moving on to the ING report. All right, the report starts. ING's monthly report, gold monthly rally might not be over just yet. Just recognize that they're conservative. They're not gold bugs, but they give pretty good recaps that confirm what we've been talking about for months on end. However, they can't take the risks that we can in publishing. So therefore, let's read what they say and let's add to it where appropriate. Well, the report, I'm not going to say the report on there. I'm going to give you my write-up on it, my recap of it. The report starts by noting the sharp sell-off in gold at the beginning of the month. This is written before yesterday's rally. Okay. It then offers a cautiously, they're very cautious in their price prognostications, outlook for gold prices driven by ongoing geopolitical uncertainties and anticipated interest rate cuts by the U.S. Federal Reserve. Things that listeners to this program know about. Before they get into that, they touch on the current market dynamics, right? And that would be, they begin by addressing the notable drop in gold prices at the start of August, again, before yesterday, which coincided with a global sell-off in equities. That's the whole yen carry trade, dragging gold down with it. They believe the decline in gold, traditionally a safe haven, I'm quoting them, traditionally a safe haven here, was attributed to liquidations aimed at covering margin calls on other assets. Now, I've never heard a bank say that publicly in a for public consumption, which is a reason to buy it. I mean, that's like a bank saying gold's a buy. And they don't usually do that even when they want to. Despite the setback, gold remains up approximately 15% year to date, they remind us. Next, they move to, so there's the gold drop chart that goes with the description I just gave you. So looking ahead in the report, they reassess several key factors expected to support gold price. So those would be economics, geopolitics, and what I would call known calendar events. So event risk. And then they update on central bank buying factors. All things that readers here are very familiar with, but let's just read it. Let's just talk about it in someone else's words, right? So we're going to start with economic drivers and monetary policy. That chart's for the next section. Economic drivers and monetary policy, they don't have a chart on that one. Central among these is the anticipated shift in U.S. monetary policy, they believe. The Federal Reserve, having maintained its key interest rate at the highest level in over 2 decades, is now expected to initiate a series of rate cuts starting in September of 24. This shift, motivated by a slowing economy, would reduce borrowing costs, thereby enhancing gold's appeal as a non-yielding asset. Now, that concept is tried and true, and it's still true in the U.S. So why has gold rallied for the last year? Because the U.S. isn't buying it. See, that's the point. the opportunity cost of gold in U.S. terms, interest rates, isn't a problem for Americans. We're just like, okay, we're not going to buy gold yet. However, in China, if bonds are at all-time highs, right, and interest rate costs are lower, and the dollar is no longer part of your day-to-day risk, you're going to buy gold. And you're not going to worry about U.S. interest rate risk because you're not dealing in dollars as much anymore. Anyway, this will dovetail nicely into the ETFs. So keep this in mind in the back of your head. Say, okay, there hasn't been much demand due to interest rates dropping, but now there could be. And that's an American comment. And that's fine. Geopolitics. Now, the ongoing geopolitical tensions that we know of, specifically the conflicts in Ukraine and the Middle East, and the strained or getting more strained U.S.-China relationships continue to fuel demand for gold. Now, we know that. That's in the market. It's if they stop that you have to worry if you're a bull. Okay? We know that they could escalate, the Middle East being the one that seems the most obvious. Event risk, known and unknown. Now, the event risk is, we'll just throw this picture up there. The event risk is the U.S. president, to them, the U.S. presidential election later in the year is also flagged as a potential catalyst for further volatility, which it already has been. It should drive investors towards gold. Investors, when they say investors, think U.S. investors. They haven't even gotten into gold yet because of the election. They're not even there yet. Everyone else is. We would add to that, or at least I would add to that, that the BRICS summit and the seasonality that marks gold's peak in summer and bottom in October. If gold's going to drop, the bottom's going to come around Halloween. That's what I believe. And I will be backing up a truck between September and Halloween, or September and Thanksgiving, because the BRICS summit and the election come up, and I think the American investor is going to wake up sometime between August and October. And there should be a dip to buy. Central bank buying. There's the China chart. Central bank buying, it's safe to say they are still buying for the foreseeable future. Now, that's not a facile term. It means they're going to keep buying until after the election. Central bank remain the key players in the gold market, with continued net buying reported, particularly from emerging markets. The report notes that recent slowdown in purchases by PBOC, official gold purchases by China, which has paused its gold acquisitions after 18-month buying spree. This pause, likely due to the high gold prices, could temporarily dampen demand. Despite this, ING expects central bank demand to remain strong overall, providing ongoing support for gold prices. Okay, stop right there. They haven't stopped buying. They've stopped publicly buying. They're buying as much or more as they have been. I just know this. I've known it for years that China doesn't buy most of their gold through the PBOC. The PBOC holds small gold compared to what the country owns for backing its own currency. So you're going to start seeing reports about that come out because gold's going to keep going up, and someone's going to discover that China is still buying gold. And we're going to say, yeah, of course they're buying gold. They have been forever, and they won't stop until they're done. And they're not done. All right. The other reason that they're publicly not buying gold as much is because they want the price to go down. They're signaling that they're going to buy more if it goes down, and they're making room for other BRICS players who need to buy before the summit, like India, who has been buying when China has not. So there you have it. So the PBOC not buying is like saying, I'm not buying, and George Soros is still buying. It's just ridiculous. All right, moving on to ETF inflows. Now, I think this is probably the most interesting thing in terms of ongoing. They observe a shift in investor sentiment. Remember, the Fed's going to ease. That means Western people will start saying opportunity cost isn't as big. I can't get 5% on my money market anymore. Therefore, I'll start throwing some money into gold, right? So they note the shift in investor sentiment as evidenced by the inflows into global gold ETFs. Global, think US, UK, Switzerland. Don't think China. They're still buying in China, as evidenced by the inflows in global, which have seen positive inflows for 2 consecutive months. That's not a trend likely to reverse. If this were any other year, I'd say, it could be noise. You have to watch for stuff like this. These little three thing here. But this is going into the BRICS summit, going into the election, going into the Fed easing. There will be, I believe, there will be almost guaranteed more gold buying. And you can see that because stocks drop, gold drops, stocks rally, gold rallies, right? And then sometimes you'll see stocks drop 3% and you'll see gold rally 1% afterwards. Gold is up more than stocks this year. And we haven't even started buying yet. Western interest is back. That's what I'm trying to say. So it's a reversal from the broader trend of outflows earlier in the year, which you've seen for a long time, right? And particularly from North American and European markets. ING suggests, this is what they wrote when I'm commenting on it. ING suggests that this renewed interest in gold ETFs reflects a broader acknowledgement of gold's potential as a hedge against both geopolitical risks and financial market volatility. That's what we've been saying. Their price outlook is very conservative, however. Their price outlook says that gold prices will continue to rise, peaking in the fourth quarter of 2024. The bank forecast an average price of $23.80 an ounce in the third quarter, with a potential peak at $24.50 per ounce by year end. This outlook is underpinned by the expectation of continued central bank buying, geopolitical tensions, yada, yada, yada. The prices, they think it'll peak at $24.50. Well, we think if it goes to $24.50, it'll go to $2,500 because there is a cap at $24.50. And if it gets above it this time, it's going to rally to $2,500. And who's going to stop it if the election is contended or if the BRICS continue to speak very well about gold? All right, that's pretty much it. Running a little bit late today. Again, I'm having rendering issues. Well, there's the news. It's actually worth reading. Geopolitics, there has been some incursion into Russia by Ukraine, whatever we're calling them today. And data on deck is 0, and there is the report discussed today. I'm Vince. Have a great day. Have a great Friday.
Thanks for watching this morning's Markets and Metals with Vince Lanci, brought to you each day by Miles Franklin Precious Metals, who we encourage you to contact for your next gold or silver order. And Miles Franklin brings us a gold and silver special each week. And if you've been looking for a pullback in the rally to purchase gold and silver, this week's deals include constitutional junk silver for only $2.50 over spot. And that's for the half dollars, with the dimes and quarters being even a little bit less. Miles Franklin also has the Trump Fight for America 1-ounce colored bars that are $6 over spot, then capture the iconic photo from July 13th. And on the gold side, Miles has 1-ounce buffalo rounds for only $99 over spot. So again, if you've been looking to buy gold and silver when the price is pulled back and the premiums are still low, now's your chance, and you can call us at 833-326-4653 to place an order or get pricing on any other item. So give us a call at 833-326-4653. And as always, thanks for watching. Please note that this video is not intended as legal licensed financial trading advice and is to be used for informational purposes only. Please contact your financial advisor before making any decisions, and thanks for watching.